Let's talk about it all with Kate Moore, Chief Investment Officer at Citi Wealth. Kate, good to see you again. How relevant, if at all, maybe it's not, is this Federal Reserve decision on Wednesday?
Look, it's super relevant. I think we can agree that everyone in the market is watching this, and that participants, whether you're equity investors or multi-asset investors or rates investors, are really concerned with the tone of the Fed coming out of this rate decision. Not so much the action itself, but whether or not we get a hawkish tone or more of a dovish tone. And look, I firmly believe that when looking at the economic data and the third-party macro data that we have in front of us right now, it is a little bit of a choose-your-own-adventure. You can pick the data points and the story that you want to tell. You can data fit your narrative. And we're interested to see how the Fed does that and how they weave through what are often conflicting bits of data on both prices as well as labor to make their assessment for what future moves may or may not look like.
So what are we paying more attention to the decision itself? 90% chance of a rate cut, according to the CME's FedWatch tool, Kate. Or are we paying more attention to what the Fed may say about the future, especially given that Chair Jerome Powell, he's only going to be chair for another couple of meetings and another couple of months? Is there one way to handicap which one might be more valuable or important than the other?
I think without question, Brian, that the focus should be on the tone of Powell's presser and then what happens after the Fed meeting, both in terms of, the speakers that come out in the following weeks, as well as the inflation data that gets released, of course, after the FOMC decision this week. So it is not just the statement and it's not just the action. I think we kind of understand the direction of travel there, but it is really the tone out of both Powell as well as the rest of the Fed speakers who will come out and talk to us as investors and talk to the media following that when we get a real sense for where the debate was in the committee. And you've made this good point, right? Powell only has a few meetings in theory left. But we do know that there are a bunch of other voters who have had a variety of different views. We know this from the minutes. We know this from the comments over the last month or two. And we think the debate is going to be very strong into the first part of 2026. And that people who are expecting a consistent pattern of rate cut after rate cut in each subsequent meeting are going to find themselves disappointed. In our view, nominal growth is going to be solid in 2026. Inflation is a little bit spicier, I think, than the average person may want to admit. And by the average person, I'm thinking about members of the administration, not so much consumers who feel this in their day-to-day purchases. And that the labor market, while frozen, is not deteriorating at a massively rapid rate, suggesting that we don't need a slash and burn rate cut policy ahead of us. So I think it's going to be difficult for the Fed over the next couple quarters to make decisions, and that the debate is going to be very important, not just the signaling at this meeting.